Hello, everyone. Welcome to today's live session. If you're watching this for the first time, we do this every day of the week, actually, whenever possible. We didn't do it yesterday, but we'll try and do it every day of the week. And it's a quick 25-minute look at what's going on in the major markets. Let me just put the risk warning up while I'm talking. I'm waiting for people to join. So it's a look at what's going on in the major markets: the euro, the pound, stock market indices, gold and oil. It's been an interesting week, particularly for gold this week. We'll start off by looking at gold, and I'll talk a bit about trading strategies as well today, because I've had a couple of questions via email talking about why I think big levels are important. So we'll definitely take a look at that as well. Whilst I'm going through all these markets, if there's anything else you want looking at, we will take a look at Apple today, because Apple's results came out after the market closed last night. I think the shares were up about 3 to 5% in after hours trading. So we'll take a look at maybe the bigger picture on Apple, because they could be in focus today. It could be something of a quiet afternoon, because there's a US interest rate decision this evening at 7 o'clock this evening. No changes are expected to US interest rates, so that's not going to be a surprise. But what the market will be looking for is guidance on what the US central bank thinks it'll be doing for the rest of this year. I think at the end of last year, expectations were for, I think, 2 interest rate rises this year. We had 4, I think, in the States last year. So the expectation was for 2 this year. But given the ongoing trade war and concerns about the economy, expectations now are for maybe just 1 rate rise this year, and maybe even none. So what will be important about tonight's announcement will be any hints the Federal Reserve give on future interest rate rises for this year. Okay, so that's it. So let's get started. Before we start, I should mention, of course, I mentioned this earlier in the week, we do these zero spreads now and again. And today we've got zero spread on gold, because it's the interest rate announcement tonight. So the dollar is expected to move, of course, and that would normally have an impact on the gold price. Gold has been a standout strong performer this month. I think it's an 8-month high today. But if you have an account with us, we started this at 9 this morning and it runs till 9 tonight. So there's no bid offer spread on gold. If you don't have an account, just go to the website Capital.com or download the app and you can set one up from there. Okay, so that's the zero spread thing we're doing today. So let's drag this over and get started. So this is the Capital.com trading platform. So let's take a look. Hang on a second. What's going on here? There we go. Full screen. So here's our gold price: 13.13.89, 13.13.89. So you can see that there's no spread on gold at the moment. But let's take a look at this market before we get into the other ones, because it's been really interesting, and it has had quite the surge in the last 5 days. So it's gone from 12.80 to 13.14, near enough. So we've seen a $34 rise in the price of gold. And of course, we've been tracking this recovery for the end of last year into this, and it's continued higher. So there's our recovery off the lows that were set in August. We saw quite a vicious sell-off for gold from April last year, because there was a resurgence in the US dollar, and the pound got hit, the euro got hit, gold got hit. But we did see it start to recover. And sort of by September, October of last year, we had this uptrend. We came back to it and tested it again in November. And it's really accelerated away since then. We had a bit of a wobble sort of the 3rd week of Jan. We were looking at this over the last couple of weeks, looking at 12.75. It's held, and the price has pushed higher. So this is where we are now. So we're pretty much back to where we were in May, the middle of May, for the price of gold. And I think the obvious target is for a run up to the January 2018 highs. So 1360, 1365, that sort of area. And that has been quite a barrier. You know, going back to July 2016, the price stopped just shy of 1380. And you can see what a problem this sort of 1365 to 70 was last year. So I think, you know, medium term, that looks like a perfectly sensible target for the price of gold. In the short term, it is a bit overcooked at the moment. If you look at the RSI down here, it's maybe a little bit overheated. You know, we've gone extreme. The last time, well, we did go extreme earlier this year, and it did cool off a little bit, but the MACD has given a buy signal. So we've got a buy signal in here on this break through 1300. You know, I think that the better entry would be if we got a sell-off from here. We had a small sell-off a couple of weeks ago. You know, if we got a sell-off again, you know, maybe back into this 1275, 1300 area, then it gets interesting to look from a buying point of view. But from a momentum trading point of view, it's clearly still strong. Let's just flip it over and look on the hourlies. Here we go. So there was that break. There was this big level. So I'm going to talk a lot about levels today, because I've had a couple of emails just asking to go into this in a bit more depth. So I will. So we'd had, you know, beginning of January, gold traded up to 1298 and a half. So let's say 1300. So we can see whenever the price was running up to 1300, the first 3 weeks of the month, we saw the sellers come in, and the price did get pushed back down. And if you were watching this over the last couple of weeks, you know, we were talking about how important 1275 had been, 1275, 1277 in the short term, you know, and it came back down to it. What was that? Just under a week ago, and it held, you know, and then it's really started moving, and it's that breakthrough 1300, and this really is market psychology playing out. You know, we've got a level where everybody, well, not everybody, but the balance of power has been with the sellers this month. You know, so a lot of people may be going short gold ahead of 1300, and we get the break, so we have people getting stopped out, short covering, and it trades through 1300, and everybody's view on where value is on gold changes, you know, and that's why we've seen the price continue to push higher. So on this hourly chart, it's still pushing higher, you know, but if we had a couple of days of the market selling off and then a bit of strength coming in, that could maybe give us the lower risk entry. But it's been definitely one of the star performers over the last couple of months. You know, if we went back to the beginning of December, where was gold trading beginning of December? 1220. So we're what, $90 higher on the price of gold. Yeah, it's a sizable move. It's about a 7% move since the beginning of December in the price of gold. And there's a couple of things driving this. Last Friday we saw quite a big sell-off for the US dollar, and I think part of that is wrapped in to maybe what happens tonight with this interest rate decision. Plus, of course, there are still concerns about the trade war between China and the US. Plus, we'll look at stock markets during today. But, you know, there are still worries about stock markets. We saw massive sell-offs of stock markets the last 3 months of last year. We have seen a strong bounce back so far this month, but, you know, it's still not clear. Is this just a dead cat bounce and markets turn lower? So in times of trouble, you know, gold is the classic, one of the classic safe haven destinations, and we're seeing that play out. So it's a really, really interesting market. So for me, let's say it sells off tonight when we get this interest rate decision. What levels do we need to be looking at? I think the obvious level is 1300. So I think the lows since the break of 1300, so 1295 through to 1305. Yeah, so we've got a $10 range there to watch. If you saw the price come under some pressure, let's see, you know, if it dips back to 1300, do we see people jumping on board having thought they'd missed the boat a week ago when the price broke out? So I think that's an area to watch. But it is, you know, undoubtedly still a strong market. And for me, you know, the target going into the rest of this year is for a run back up to 1360. But if we're following this trend, you know, a better entry would be if we had a deeper sell-off. So it's a really interesting market to watch, the price of gold. So I thought we'd start off with that one tonight and then watch it this evening. You know, at 7 o'clock this evening is when we have the announcement from the US Central Bank on the rates. So let's see how this and other dollar-denominated markets perform. Right, we can't do one of these sessions without mentioning the B word, of course, Brexit. So last night, we had the votes on the proposed amendments to Theresa May, the UK Prime Minister's Brexit deal. And I think most people are saying, well, this ended up being a victory for Theresa May, the Prime Minister, a rare victory maybe at the moment. But so the Prime Minister is going to go back to Europe and see what sort of deal amendments can be negotiated. The EU is saying we're not making any changes, so it's going to be again an interesting few weeks. So we did see, if we change this over to a 5-minute chart, we did see the pound sell off quite sharply yesterday. So where were we yesterday? The 29th of Jan. So it pushed up. It was really interesting. It pushed up in the afternoon when Theresa May was speaking in Parliament. It pushed up in the afternoon to 132. But then pretty much as soon as she stopped speaking, it lost those gains. And then as the vote started coming through, we saw the market get clobbered back. But it did stabilize about what, sort of 8 o'clock, 9 o'clock yesterday evening. So it was a pretty big range yesterday, from 132 down to 130.50 near enough. So 150 point swing over about 7 or 8 hours yesterday for pound US dollar. But so it's dramatic, it's dramatic on the day, but in the great scheme of things, all it did was knock the market back to where it was on Friday morning. And again, this is where I'm going to talk about the importance of these big levels. Let's just flip this over to an hourly chart. Let's just take a step back and look at this. So we saw a really strong performance for the pound this month. We've gone from a low of 124 against the dollar on the 2nd of January to a high last Friday of 132. So we've had an 800 point range for pound US dollar this month. It's a good range. But you can see, on the way up on Friday, the low on Friday was about 130. What was the low? 130.60 on Friday, and then it rallied 140 points. It sold off yesterday, but look where it stopped. It stopped 130.55. So again, I can't stress enough, if we're trading these markets and looking for levels to place stop losses, look at how the market performs around previous important levels. And we're going to see this when we look at oil and US stock markets as well, because I think it's played out this week, the same sort of thing. So we had the sell-off for the pound yesterday. Okay, it spikes that level by about 5 points. It pushes through Friday's low by about 5 points, but then spends the next couple of hours just hanging around. So again, the big trend for the pound for the month is still up. It sold off 150 points during the day. But if we're looking to be a buyer, then even if we're buying a couple of hours after that level's held, we've got a really logical place to have our stop loss. If we were a buyer, let's say 11 o'clock last night, if we were still watching it at 130.80, the tightest we could have our stop is below here, the other side of 130.50, and maybe a more conservative place, if we're looking for a bigger swing, is the other side of 130. And that's the lows from last Thursday. So for me now, it is interesting here. I think I've been saying really all this month, I think the pessimism regarding the Brexit outcome is being overdone, particularly when it comes to the pound. And I think, we could well see further pound strength into whatever happens at the end of March. But if we're trading it at the moment, 130.50, 130 to 130.50 is the big level to watch. So let's see what happens. For now, that big trend for the month so far is still just about up. I think if we start to lose 130, then maybe we're going to get a deeper sell-off. But for me, while it's above there, the momentum is upwards for pound US dollar. That's not to say it's going to go to the moon. Let's not get too carried away on how high it could go, because we're already potentially getting near what has been a problem area. So we saw in November 132, 131.75 had stopped the price, 132.60, and then 133. So we do have quite a fair bit of resistance just above where the market's currently trading, but maybe we'll have one more push up into there over the next few days. Let's see. But again, we've got this interest rate decision tonight, so we'd expect a quiet afternoon and then perhaps plenty of volatility at 7 o'clock when the US announces the rate decision. But I think for now, this trend for this month is still up. So let's see. We'll come back to it on Thursday tomorrow and see where we're trading. Of course, it is pretty overcooked, pretty overbought, given the strength of the move this month. MACD looks like if we get a bit of weakness for pound US dollar, we could see the MACD hook down and give a sell signal. But let's see what happens. But we know the levels to watch: 130 to 130.50. Now the euro US dollar. This has been a little bit boring, but I wonder if we're finally going to see a half decent rally. It has been moving higher over the last few days. You can see there's the daily chart. You can see just how low the volatility in euro US dollar has been since November. We've had this really tight range. It got as high as 115.75, but before that it was trapped by 115, and on the downside supported by 112.60. So it's been a really tight range for a few months. But it's, once again, the 113 level held pretty much last week. It traded to 112.89 on Thursday. We had that big move on Friday off the back of dollar weakness, and we've pushed a little bit higher this week. So if we flip it over, there we go. So there's our move on Friday. This is the hourly chart now. The dollar weakness on Friday, lifting the euro, and it's trying to nudge its way. We did have a fresh high for that recovery yesterday, 8 o'clock yesterday morning, and it's pushing a little bit higher. So again, if you're an aggressive trader on euro US dollar, where would your stop go? For me, the tightest I would want it is underneath yesterday's low. So yesterday's low, 114.10, pretty much. Maybe a wider stop is below the low from early in the week, 113.90. So 113.90 to 114.10. It's been pretty good support for euro US dollar. So maybe we'll see this market push a little bit higher, but again, a quiet afternoon. Let's see what the doodah, the interest rates do this evening. Let's look at the price of oil, because we are maybe it's gearing up for a push out to new highs in this recovery. It's been a dull week or so for the price of oil, but we do have the inventories out this afternoon. So 3:30 this afternoon. Every Wednesday, traditionally, we get how much oil is stockpiled in the US. We can often see volatility off the back of that. And we've got some really obvious levels to watch. First of all, the highs from the 21st of Jan. This is the highest oil has been in this recovery. So the high is $54.50, near enough. The price is currently $53.90. So we're just 60 cents below that level. If we saw a move through through 54, 55, I think maybe then we can start looking at a much stronger recovery in the price of oil. But let's just flip it over to an hourly chart, because I want to again just show this idea of how important previous levels are, I think, when it comes to setting up trades. If we were looking, first of all, we were looking at this, I think, last week. So the 22nd of Jan, it slipped to 52. Then it moved 150 points off that level. It slipped again the next day, but again, it slipped through by 12 cents. 10, 12 cents. It's nothing. The price stabilized, and we had a $2 move off that level. This week has been a bit messier, I think. Let's just pick up on how that old support has held for oil. So we had this move on Monday of this week. So again, coming back to the sort of 52 area, 51.80, it did poke through, and this ended up being a false break. And false breaks, by definition, when it's happening, you don't know if it's going to be a false break or not. You've got to wait to see what the market does. But they're aggressive trades, but they can set up great risk versus reward potential. So let me just talk through what happened early this week. So the market sells off. It breaks 51.80, 51.90, but only for an hour. So it goes down. Where did it trade? Traded as low as 51.40, and then over the next couple of hours rallies back above. So I would suggest, if we see a level break, it's almost don't believe the first break. If the market pushes through old support like this, be inclined to think, well, actually, this could well be a false break. And one way of trading it is to wait to see if the market recovers the level it's broken. And then I think there are a couple of ways of trading this then. The aggressive trade is to be a buyer. So we'll be a buyer at 50. So we do weighted here 3 hours. So this is 7 o'clock in the evening on Monday. So we're a buyer at 52.10. The closest I would want my stop is below the low of the false break. So the low of the false break, 51.40. So we got a 70, 80 cent stop on oil, which is nothing. And it also coincides with these old lows back here. So these lows from the 17th of Jan at 51.28. So, if we're a buyer at 52.10, we put a stop at 51, for example, a conservative stop. And it's a way of playing that out and positioning yourselves to see if that is a false break. Since then, the market has wobbled around, for a few days, but has been getting a move on, and as we speak, is pushing out to pretty much its best levels for a week. So going into the inventories this afternoon, let's watch to see how 54.50 fares. Do we get a break through 54.50? So, but even if we get weakness, if it sells back up to 52, let's see how this old level performs. So I think we've got some clear zones to watch when it comes to the price of oil. But I think if we break 54.5, 55, we could see the start of maybe the next leg higher. Let's just take a look at what that would mean on the charts. It would be a pretty major break because we'd be breaking through these December highs, and maybe the next logical target, a run back to the mid-November highs, around at $57.50. So it's been a quiet week. I think that 54.5 to 55 is pretty key. Let's see what happens as the day goes on. Okay, there are a few questions coming in, which is good. I'll carry on just dealing with the stock markets, and then we'll jump on. I'll jump on the questions and try and answer them as best I can. So let's take a look at US stock markets, and then we'll have a look at Apple. Then I'll do the questions. So let's just take a look. This is the S&P 500. So if we see what this market has been doing, it's been, I think, a bit of a scrappy week for the S&P. So we had the lows on Christmas Eve. The market has been recovering since then. The low set on Christmas Eve was what, 23.40. We're currently 26.50 and a bit. So the market's rallied 300 points, 10% and a bit more move off those lows. So it's set up to be, so far, it's been a good month. It's been a good start to the year. But the question is, is this sell-off still intact? And I suppose if you picked up on the trend line, let's just draw that trend in. Hold on a second. Let's just pick up on that. Off those highs from up there, we're still there. We're still within that downtrend. So I think, I'm still a bit nervous, because I'm sure we've all got, pensions and shares and stuff like that. I'm still a bit nervous as to whether we're going to see a major leg down for stock markets, as the year goes on. But I think, so in the short term, 2,700 for the S&P 500 is probably the big level to watch. If you start breaking through there, do we see the start of the end of this correction, this downward move? Let's see. But let's look at the short term, because again, talking about the levels, I think what was interesting, we started, and I missed this because it turned around so quickly, but we started this week with a really sharp sell-off. So end of last week, so pretty positive finishing pretty strong. Started this week with a really sharp sell-off, but again, we held above. These are Thursday's lows. Let's just pick up on that. Pick up on those lows for Thursdays. And we have again this sort of false break thing. Okay, so the market on Thursday traded as low as 26.25, then rallies into Friday up to sort of 26.70. Sells off really sharp on Monday on the open. So this is sort of 4 o'clock, 5 o'clock UK time. So 2 hours into the US session. Breaks it, but again turns round. Yeah, but for me, it turned around a bit too quickly. And again, was that yesterday, comes back towards the lows and holds fairly quiet day yesterday. And at the moment, pretty strong today in the overnight market ahead of today. So again, for the rest of today, we could have a quiet market in the US until this interest rate decision is out of the way. But watch the lows from earlier in the week. So 26, 20, 23, 26.30. Let's see what happens. Okay, but it's looking positive going into today's session. I think because we maybe didn't have disastrous results from earnings, stock markets from Apple, stock markets still sort of reasonably well buoyed up. Let's take a look at the Dow quickly. I'm expecting similar. The Dow's having a bit of a sharper move pre-market. The Dow is actually on that. Hang on a second. So the Dow is in the pre-market trading, has very briefly moved to new highs for the month. Okay, so the Dow, of course, is slightly different to the S&P. The S&P 500 is 500 shares. The clue is in the name, and the Dow is only 30. So the Dow has poked through by 10 points in pre-market trading to new highs for the year. So let's see what happens the rest of the day. But it could be, I think, it could be for an interesting session. I mean, that is quite the jump from 24,680. It's moved 200 points in the last hour or so. So I think maybe we could have a bit of volatility, even though we've got that interest rate decision. But positive, stock markets still look positive after a fairly quiet week, and it still looks to be plenty of support. If we see these markets sell off, I think the levels to watch yesterday on the Dow, maybe the late highs at the late lows at 24,500, and then we've got Monday's low 24.3, and then back here the low from the middle of last week 24.2. So if we had a deeper sell-off this afternoon, plenty of support just below. And the DAX has been doing its own thing again. The DAX has been losing ground after a sterling performance last week. The German DAX, if we flip this over, I think it's been in reverse for most of today. So this is a 5-minute chart we're looking at. But again, this whole idea about levels, right? Let me show you this on the DAX. So the DAX low from yesterday is here. Okay, so that was at 8 o'clock yesterday. The DAX traded to 11,163-ish. Where's it turned around today? So the low today, 10:30 today, same sort of area. Yeah, so it doesn't definitely mean clearly the market is going to turn around off these levels. But in terms of if we're looking to place a trade, where does our stop go? We have a logical, if we're looking at these big levels, logical place to play stops. But it's been sort of drifting, whereas US markets have been strong. So for the rest of this week, 11,160 I think is a big level to watch on the DAX. Right, Apple. We'll look at Apple, then I'll jump into the questions. So let's take a look at Apple. So Apple shares were up. They were down 1% on the day yesterday, but they were up sort of 3 to 5% in after hours trade. And I think if you look on our YouTube channel, I did a video on Apple about 2 or 3 weeks ago. And I think, clearly it had a really tough time of it last year. Peaked in October, $233 a share. Was trading as low as 140 at the beginning of this month, and ended last night official trading at 154. And I think this 140 is the big level for Apple. So let's just zoom out for Apple. So there we go. There's the last two and a half years or so for the Apple share price. And I think 140 is really the big level. If you thought that actually Apple was going to run all the way back up to the highs from last year, it's an interesting place to buy down here, because I think we've got a logical place for the stop loss. Right? If we were going to, this 140 level was pretty important. April 2017, June 2017, bang, 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 lots of support at 140, and then of course goes racing away up towards 235. So just if we bring it up to date, and if we plonk a trend line on the Apple price, I suppose if you were drawing it from here, you can have a much shallower trend line, but maybe the sharper trend line looks something like this. So I think from a short-term trading point of view, what would be the trigger to think, well, maybe I want to buy in? I think if you look on the hourly chart, maybe 160. So last night it would have traded up to 160-ish. So let's see how it performs today, because 160 was a bit of a problem. Admittedly, it's in between Christmas and New Year, and then it gapped lower coming into this year on that it wasn't really a profit warning, but downgrading revenue expectations. Let's see what happens if we break 160. It does start to look that maybe it's made a base, and I think stops below 140 look like the obvious level. So I think Apple will be one to watch a bit later today. Right, I'm gonna deal with the questions now. So if you're gonna nip off, to open an account, clearly go to our website, Capital.com, or go and download the app, one of our apps from Android or the iTunes place, whatever it's called, the App Store, and you can take advantage of that zero spread promotion we've got today on gold till 9 o'clock. And we do these zero spreads quite regularly. I think we've done one a week so far this year, but if there's a market that's interesting and an event that's happening that's interesting, we will often try and do some sort of promotion so people can maybe trade it a bit more with zero spread. So to open an account, just go to our website. Right, let's have a look at the questions. So the pound appeared to be improving after last night's drop. Would you still recommend investing in the pound in the short and medium term? I would never recommend anything, of course, because we don't do recommendations. I mean, my opinion is, you can't argue with the trend for the pound this year since that low in whenever it was, 2nd of Jan. So if we pick up on that trend, that trend is still chugging along higher. And I think for me, it's all about that 130 level. I think if 130 continues to hold, that recovery is still going strong. It is overheated up here. It is overheated, and you can see on the RSI, this is the most overbought it's been since at least September of last year, and maybe even April of last year. So it is, after an 800 point rally, it is due some sort of correction. But for now, it still looks strong, so we'll see. I mean, I think the better trade would be if we had, a few days of it selling off and then see where the strength comes back in. We were looking at this 128 level a couple of weeks ago. So in terms of risk versus reward, there are maybe better levels, but I think for now, 130 to 130.50 is a big level to watch. Any news about Euro stocks? And I don't think we cover Euro stocks actually, do we? But I suppose the DAX is oh yes we do. See, I should know this, shouldn't I? Let's have a look. I'm guessing the DAX is a good proxy for it, but let's have a look. If we look on the dailies, wow, look at that. That's an even worse downtrend than the DAX has been in. So we look on the daily. This is the Euro Stoxx 50. So we've been clearly in a downtrend since July last year, and it's a bit like the S&P here. Do we think that this move is just like a dead cat bounce and it hooks lower? On the short term, we flip this over to maybe a 4-hour chart. We've got this trend off those. Again, it's these sort of post-Christmas lows. The trend is still very much in place, isn't it? Let me pick up on that. If we picked up on, I suppose if we took them off the lows, it looks something like that. So that trend is still chugging away with support coming in on the trend line, I suppose coinciding with these lows from last week, 30.85. So it's still positive, isn't it? I think it's just as with these US markets, it's still technically within its downtrend. Are we going to see the market hook lower, but still positive for now? What else? New Zealand dollar, Canadian dollar. Okay, let's have a look. Let's have a look at that one. NZD, Canadian dollar. Let's have a look. So you said you went short at 90.50 this morning. Very good. So you're up a bit. Let's have a look at the big picture first of all. So it's interesting, isn't it? It ran up from those lows in October. Stopped again, major resistance at 92. Had a few goes through it, could not break it, could not get through. So quite a few false breaks. Sold off, rallied. I think if you think this is the start of a downtrend, it does make sense to be short, doesn't it? And the logical place, I think there's a couple of places you could have your stop. I mean, the logical place for me would be above 91. Because it spiked up to there, not got through, and sold off. But it still looks weak, doesn't it? It'd be interesting to see what happens if it gets back towards 90. Do we see it break and a deeper sell-off? But yeah, it does look like it has rolled over the last month or so, doesn't it? Thingy-majiggy. New Zealand dollar, Canadian dollar. Is it possible to say a bit more about understanding and using the RSI and MACD indicators? Yes. Yeah, I'll do a little bit on those. So I am in the middle of doing like a how to trade Forex course. So we are going to cover all these technical indicators. So just make sure you're subscribed to our YouTube channel by pressing subscribe down there. But what the RSI is, the relative strength index. So this is a 10-day RSI. So what it does is it looks at the price and the price changes over the last 10 days. And then there's a calculation that goes into it. The RSI will always have a reading between 0 and 100%. Okay, you can see this on the axis here. So traditionally, anything above 70%, the market is said to be overbought. So it's trading in that at the top of its range over the last 10 days. So anything below 30%, the dotted line down here, is said to be oversold. So traditionally, people will use the RSI. We're still on this New Zealand dollar, Canadian dollar chart. So they'll use the RSI, saying, okay, down here it's oversold. Maybe the sell-off has gone too far. Okay, up here it's overbought. Maybe the rally has gone too far and is due a correction. So it's looking for reversals in the market. But you can see the problem straight away here. Look at this. So our RSI has been overbought on New Zealand dollar, Canadian dollar, beginning in November, when the market was 87. The market went up another, 500 points before stopping. So I think in a strong trend, they will give readings that are too early, but they can be useful to help you figure out, the overall heat in the market. Is it getting overstretched? But I'd never use them on their own. If you have a market that's going up, you use an overbought RSI to maybe buy into the trends. But I think they can give readings far too quickly. And the MACD is slightly different, slightly more complicated than MACD, but it's basically a moving average. It looks at three moving averages, 12, a 26, and a 9-day moving average traditionally, which are classic trend following systems. And just to look at the signals, the sort of signals we get when the MACD, when the lines cross over. Okay, so there was a buy signal October, whatever it is, October the 11th, a sell signal up here, again, a bit too early, a sell signal there, which is pretty good, and a buy signal down here, which was not too bad. Okay, so that's how the MACD works. And the histogram gives you an idea of whether the MACDs are coming close to giving a buy or a sell signal. So then when the histogram's falling, maybe we're getting a bit bearish. But I'm going to do a whole load of videos on these technical indicators over the next few weeks, so you'll see them on our channel. My portfolio is down £30 after holding on to GBP USD and GBP Aussie dollar for too long. Should I accept my losses? I think that's up to you. That is up to you. But I think it does. You should have, not just you, obviously. We should all have, when we do a trade, we should have a level where we're going to get out if the trade goes wrong. Right? Every trade should have that. So you shouldn't, and I think it's a mistake we all make in the beginning, but you shouldn't be in a position where you're saying, oh, I'm losing this money. What do I do now? You should have a plan in place. So for example, going back to pound US dollar. So for me, if I was a buyer now, I would put my stop loss maybe 130.30. So I'd buy it at 130.89 with a stop at 130.30, and I would put that stop loss on when I do the trades, okay? Because otherwise we're just gambling. So I think there's a lesson there for all of us. Whenever we do a trade, and it's very easy in our platform to put the stop loss on, put a stop on. You decide where you're going to get out before you get in. That's the most important thing, is what's my risk going to be? Yeah. So good luck with those, but let's see what happens. But have a stop loss, have a level, and for me, clearly it's determined by the chart where I'm going to get out before I've got in. Can you explain zero spread? Yes, all markets have a spread. So if we look at the FTSE 100 on here, hopefully you can see that clearly on YouTube. So the FTSE 100, you can see the sell and the buy. So the sell price is 57.5, and clearly it's changing, and the buy price is a point higher. So in effect, that's our commission, Capital.com's commission. As with all brokers, there is a spread in the market. So as soon as you buy, you're always a little bit behind because of the bid offer spread. But when we do promotions like we're doing today on gold, there is no spread. So you'll see the sell price and the buy price are exactly the same. So we are effectively foregoing our commission on that market for 12 hours today, and hoping clients appreciate it and trade a bit more. Yeah, so that's the spread. But all markets have one. Bitcoin, for example, because it's not the most liquid market in the world. So there's Bitcoin, the Bitcoin spread. If you're a seller about 34.24. If you're a buyer at 34.57. So Bitcoin is a $30+ spread because it doesn't see enormous amounts of volume, and it's a bit of an odd market. So if you bought Bitcoin, for example, the price needs to move $30 for you to break even. If you bought the FTSE, the price needs to move 1 point for you to break even. If you bought euro dollar, it's not even a point spread. It's, what is it, 0.5 of a point spread. Okay, so that's spreads. That's how they work. So it's your, as a trader, your cost of doing business is the spread. And from our point of view, our reward for providing prices is the spread. In an ideal world, half the customers buy the euro, half the customers sell the euro, and we just keep our little spread in the middle. Yeah, we don't care who wins or loses. We keep the spread in the middle. So that's how companies like us earn money. But for gold today, we're doing no spread on gold till 9 o'clock this evening. Okay, that's it. Everyone happy? Good. So we will wrap things up there. We'll do this again tomorrow, of course. So 12:30 tomorrow. We'll see how the markets have reacted after the 7 o'clock interest rate decision this evening. We also have those oil inventories at 3:30. Then on Friday, it's non-farm payrolls day. So it's US unemployment numbers on Friday. Big day on Friday. So we're going to start the session at 1:15 on Friday because the number comes out at 1:30 on Friday. That's it. So if you don't have an account, go and open an account, please. We don't just do this for the good of our health. So if you open an account, you get access to all the stuff I've looked at today, all the markets, the zero spread, all of that. And you can do that via our website, Capital.com, or by downloading an app. If you have any questions, anything you want covered over the next couple of days, just drop me an email, david.jones@Capital.com. And there's a whole load of useful information on our YouTube channel. So if you're on there and you've got time, just have a look at some of the videos we've done in the past. I'm going to do a more in-depth video tomorrow on gold, just talking about why it's risen so much. So we'll upload that by the end of the week. But thanks for coming along today. Hopefully you can make it tomorrow at 12:30, and we'll see what's happened to markets after this interest rate decision. So we'll wrap things up for there, and hopefully see you tomorrow.